Hey everyone, this is Richard, CEO of altFINS. In this video, I will cover the recent market correction, the reasons for that correction, what can we expect in the near-term future, and also how to profit from the volatility. So let's go ahead and take a look at the recent performance. If you look at the performance tab, we can see that Bitcoin in the last week is down almost 5%, Ethereum also almost 6%, but in the last month, Bitcoin is down 7%, Ethereum as much as 16%, and then the rest of the altcoins land is down in the last month or so, anywhere from 10 to 40%, Polygon, Near, and so on. And really, from the peak levels, we're down maybe even 40–50% from the recent peaks. And the reason for that is really macroeconomic, specifically inflation. So let's take a look at inflation. This is a supercore inflation, which basically excludes certain volatile components of inflation, like cost of energy, cost of housing, and as you can see, the inflation had been declining after spiking up in 2021, 2022. It had been declining in 2023, most of it, which was positive news for asset valuations of technology stocks, but also other risk assets like cryptocurrencies. Because typically lower inflation means lower interest rates, and that means higher valuations. But in the first 3 months of this year, as we can see highlighted here, inflation has been perking up again. And we got the most reading inflation reading number came out last week, which was one of the reasons for the decline in the valuations and the prices of cryptocurrencies. And it looks like inflation is returning, which means what? That means that the Fed may not be able to cut interest rates as had been expected. So the Fed, which is the US central bank, had been indicating that with the inflation coming down last year, they were inclined to lower the interest rates from the current 5–5.5% level, by the end of 2025, by several cuts, maybe even down to 3% or so. However, and that's the blue line, right? The blue line is what were the expectations for interest rate cuts over the next 2 years, or really year and, well, really the next 12 months, which is basically from now until January 2025. Clearly, the expectations were that the interest rates were going to come down, and that's positive for valuations of risk assets like tech stocks and cryptocurrencies. But after last week's inflation reading, those expectations from the market, various economists and analysts, were adjusted. And that means here's the black line, shows that the expectations of interest rate cuts have been reduced. In fact, some analysts predict that there may not be any interest rate cuts this year at all. So this has a negative impact from a macroeconomic standpoint on valuations of cryptocurrencies. So getting back to our performance here, we explained the reasons for the recent correction. Obviously, that's somewhat now priced in. That's already reflected in the prices. Now, the problem is that the trends are changing as well. And I think the market regime is potentially changing from the straight up or recent really strong uptrend to more of a sideways choppy phase of the cycle. Here you can see the trend for some of the top cryptocurrencies. Bitcoin remains in an strong uptrend on the medium and the long-term basis. I pay attention a lot to the medium-term trend, frankly. That's one that's more established, not subject to short-term volatility. It's a more established trend, but not too long or too old, if you will, which is the long-term trend, right? So I really pay attention to the medium trend for my trading purposes. And it's a mix. It's a mixed bag. Ethereum is neutral on the medium-term basis. Binance Coin is still in a strong uptrend. As you can see, XRP, Cardano, and a bunch of others are already in a downtrend on the medium trend basis. But it's a mixed bag across the landscape. So it's an uncertain time whether this recent correction is a beginning of a bearish trend reversal or just a correction. But I do want to be more cautious with my trading. I think when the trends are changing, that we need to, traders need to also adjust their strategy, be more cautious, be more selective with the trades, take profits sooner perhaps. Let's not be greedy. And also use all the risk management tools that we need to. So the other thing that I wanted to show is on the signal summary, we have a good summary of various market signals, but the one that I wanted to take a look at was the number of assets that are still in a strong up trend across short-term, medium, and long-term basis is at 37 out of 3,000, only 37. And in a strong downtrend across short-term, medium-term, and the long-term basis is 91. So there's more assets now in a downtrend than in an uptrend. And also, that's strong up versus strong down. But if you just take a look at up, that's 86 versus down 131. So clearly, the trend regime has taken a beating and maybe inflecting, and we may want to be cautious here, right? Now, having said that, one other thing that I want to also point out is that a lot of the assets have recently crossed, the prices have crossed below the 200-day moving average. And then that's another warning signal in terms of long-term trends as well. So if we look, if we create here a market scan, very simple one that says last price crossed below the 200-day moving average in the last 5 intervals. Since we are on a daily time interval, this means in the last 5 days. Okay, we're starting with about 2,900 assets. We add this filter, now we're down to 500. So 519 assets have recently had a bearish crossover of price below the 200-day moving average. Okay, let's take a look at the charts here. And let's get rid of the stable coins, of course. So let's just focus on just regular spot assets. And that gets rid of USDC, USDT, and other assets. So as you can see here, we got Ripple, Cardano, Polkadot, and a bunch of others, about 400, that have had a recent price cross below the 200-day moving average. And that's a signal of a bearish onset of potential downtrend. Now, maybe the prices will regain those levels and then continue going straight up, but I doubt it. So my guess, again, is, and what I'm going to do is to be more selective again. This is going to be really a swing traders market, not a trend traders who's just buying every dip and every breakout, but really a swing traders market, meaning there's going to be a lot of choppiness, ups and downs, and I'm going to be using some support and resistance levels as well as the RSI oversold, overbought levels to time my entries and exit to try to generate profits from those ups and down swings. I will still try to trade with the trend. That's still a very important rule. So I'm going to look for assets that are still in an uptrend and buy those, and maybe also short sell other assets that where the trend is breaking down. And that's the other important thing that I wanted to point out, is that I'm going to be running a more balanced book, meaning I'm going to be buying or going long some assets, but I'm also going to be short selling some other assets where the trends are breaking down. And that way I'll have both some buys and sells. That way, if the market tanks on me, I'm somewhat hedged and protected, and I can make profit on the price declines. And these techniques, these trading strategies, as well as the risk management techniques that will be very critical in this market, are explained and covered in our new trading course, which includes 10 lessons. I can actually show you what it looks like. We just released it less than a month ago. It includes 10 lessons that cover 7 specific trading strategies for every market cycle, as well as important risk management strategies, such as how to set the appropriate stop loss levels, how to use proper trade sizing using the 2% of capital rule, and also how to use 2-to-1 reward to risk ratios. These are 3 important risk management strategies that we cover in lesson 9, for example. But we also demonstrate how to use margin accounts to short sell assets as well, which enables me to generate profits from price declines, but also to hedge my portfolio. Now, in the near term, what I think we'll see is a bounce up from oversold levels. What I mean by oversold, let's go ahead and open a new tab here. When assets decline rapidly, there's typically a level where they become oversold based on the RSI level. For example, let's take a look at Ethereum. If we pull up the chart here, okay, the RSI indicator is right here. As you can see, when RSI approaches or crosses below 30, like here and here as well, it bounces back up. Now, it may not continue up, and hit new all-time highs, but typically there is sort of a buying that occurs at these levels when RSI reaches 30 or even less. And then we can see that happen in Ethereum on this recent pullback. Let's look at Binance Coin as well, right? Big down candle here, down wick. Maybe that's not as clear. RSI only hit 45, the low, which wasn't that low, but let's take a look. Solana, right? Hit 30 and bounced back. I do think that this bounce back will last for another perhaps 10, even 20%, as we sort of bounce off of the support levels and off of these oversold levels, right? And we'll reach the next resistance level. So, I think the near-term trade is to buy some of these oversold assets that are still in an uptrend. And for that, we have a specific preset market filter or strategy that you can find on the preset filters strategy blocks. And it's called oversold in uptrend. What this market scan or market filter does, as you can see in the filter definition here, it looks for assets that are oversold with RSI below 40 in this case, but are still in an uptrend on a medium-term basis as well as long-term basis. Okay, among these assets are Solana, Internet Computer, Litecoin, and others. And so, these are assets that are still oversold but are in an uptrend, so they're due for a bounce back, and we're seeing some of that bounce back as we speak, right? And how far will this go? I think this bounce back will go up to the next sort of resistance area. So let's take a look at Solana. Now, the resistance or support levels is also something that we teach in the trading course, how to identify the support, horizontal support and resistance levels. But in this case, for Solana and some of the other top assets, we also have a technical analysis where we already identified those critical levels. For Solana, the critical level is 160, and 125 was the support where the price bounced off of, and now it's likely to retrace up to 160 resistance. Okay, so that's kind of the short-term trade in my mind. So right now we're at 150, 152, so we've got another 5-6% before we encounter some resistance at 180. Sorry, 160. For some of the other assets, ICP, we also have technical analysis. So let's take a look at where the critical or key levels are. It reached as low as $12 or even below that. It's bouncing off of that level and is likely to bounce back up to that nearest resistance zone of $15. So that's really our near-term profit target. Okay. Again, another asset that's in an uptrend. So if I'm buying it with the existing trend, direction of the existing trend, which is up. I want to be buying those that are in an uptrend and sell those that are in a downtrend. So that's the one potential way of finding some trading ideas. Another one is similar. Let's see if this other filter is similar. It looks for assets that are oversold and have had a bullish momentum shift. Let's see if we see any assets. Okay, so these are assets that are also oversold, also in an uptrend on a medium and long-term basis, but already have bounced up. They're already sort of bouncing up. We can see that they found support and they're bouncing back up. So this is a bit of a later stage of that bounce. And here we are, Solana, Orbler, not familiar with these. But in any case, this is another useful market scan for finding some trading ideas for assets that could be good candidates for a bounce up. Now, however, some of the assets are already have broken down, have trends that have broken down and are frankly in a downtrend. Let's take a look at XRP, for example. Let's get rid of some of these averages. As you can see, price is broken below the 200-day moving average. For me, and there was a warning sign here from MACD, but for me, when prices break below 200-day moving averages, that's a big warning sign, a big red flag. And as you can see, the medium trend has already changed to down. Now, it is also oversold, right? As you can see down here, it reached RSI levels of 27, so below 30. Now it's bouncing up a little bit. As you can see, we're seeing a couple of green candles in the last couple of days. But to me, what is likely to happen in this case is that the price is going to bounce back up to the next resistance level. Let's take a look at, my guess is probably here 55, maybe 60 cents. And it's going to revisit those lows again. So I would be shorting and short selling this asset on the bounce up at around 55 to 60 cents. Let's take a look at the technical analysis here so we can see where are some of those key levels, key horizontal levels in this case. And they are resistance zone at 55 cents, like I mentioned. The 200-day moving average is at 58 cents. So that's kind of where I would be opportunistically looking to short sell XRP after this bounce plays out. And the way I do that is I will set an alert to let me know when price is above, okay, I'm going to say when it gets to above 55 cents, this could be my alert to alert me that this could be a good short sell candidate. And I create this alert and wait for it. These alerts are sent to either my email or my mobile app if you've downloaded the mobile app, and also in the alert section of the platform as well. Okay, so this is how I would play the market. In the near term, I do think there's going to be a couple more days perhaps of this bounce up from oversold levels. So maybe I'll take advantage of that with the assets that are still in an uptrend, as I mentioned, using the oversold and upswing, oversold in uptrend market scan. But with those assets that are in a downtrend already, I would wait for the bounce up to a resistance level to use that as a short selling opportunity. And with this strategy, I will have hopefully both some longs and some shorts, and a more balanced portfolio. So if we go higher, I'll make some money on the longs. If we go lower, I'll make some money on the shorts. But I do want to be more cautious here, like I said, more selective, and be mindful that the market regime perhaps is changing. And so I'm not going to be just a overly optimistic trader here, and really pay attention what the market is telling me, that there are some new macro or other risk factors that are playing out here, and therefore I want to be, again, more cautious and use the risk management tools that I mentioned to protect myself from downside. One other trade I wanted to also highlight is similar to XRP, which is Aave. Okay, also an asset that's breaking down. As you can see, the medium-term trend is neutral, so maybe not as clear as with Ripple, but it has broken below the 200-day moving average. Now it's bouncing back up from oversold levels. Here RSI reached as low as 28. So we're seeing some buying, some bouncing up, back up. But my guess is that as this price gets back to that $100 resistance and the 200-day moving average, it's likely to get rejected and pull back to the lows that we saw a couple of days ago. And the low for this candle was $70. So if I shorted $100 or so, maybe even lower, I could make 20 to 30% profit on the short sell trade. So that's how I would play it. And again, in this case, I would place an alert to let me know when the price gets back up above, call it 97, close to that $100 short sell candidate. Okay. All right, everyone. Want to remind you that this video is for informational purposes only, not meant to be financial advice, and please do your own research. Good luck trading.